Hey everyone, welcome back to Corporate Decoder, the place where we try to understand what makes big companies tick, and today we're diving deep into an S-1 filing. It is like a company's resume for going public with a twist, because this one's a bit of a puzzle, especially when you see the numbers and the risks involved. So buckle up as we decode VenHub Global Incorporated. Now VenHub is trying to make a splash in the retail world with something called autonomous and robotic smart stores. It sounds super futuristic, right? The idea is to combine the intelligence of a store with robotics to create a 24/7 shopping experience that you can control with your phone. Before we get too excited though, let's look at the money honey because that is where the real story is. Okay, so checking out their balance sheet as of the 30th of September 2025 compared to the 31st of December 2024, we see they have about 1.3 million in cash in both periods. That is not a huge jump. But look at their inventory, that has jumped significantly from about 900,000 to over 1.4 million. So they've got more stuff sitting around, which is fine if they're selling it, but it is a concern if they are not. And then we see their total liabilities. They've more than doubled from around 6.3 million at the end of 2024 to over 12.3 million by September 2025. That is a huge increase in debt, especially when you look at their stockholders deficit, which is a fancy way of saying they have more liabilities than assets. That deficit has also more than doubled to over 7.7 million. This is a big red flag right here. Now let's look at their operations. For the 9 months ending the 30th of September 2025, they reported revenue of over 800,000, which is a step up. But then they have cost of goods sold of over 550,000, leaving a gross profit of only about 258,000. The real kicker is their operating expenses, which are a whopping $30.7 million. This leads to a massive operating loss of over $30 million. And when you add in other expenses like settlement expenses, which are almost $18.3 million, their total net loss for those 9 months is nearly $49.2 million. That is a huge number, especially compared to the same period in 2024 when they had no revenue and an operating loss of about 7.6 million. So while they're making some sales, their costs are absolutely crushing them. This translates to a loss per S-hair of $1.58 for the 9 months ending September 2025, which is a big drop from the 30 cents loss per S-hair in the prior year. Looking at their expenses, you'll notice a massive line item for share-based compensation in the 9 months ending September 2025. It is over $25 million. This is a non-cash expense, yes, but it means they are giving away a huge chunk of their future ownership to employees and contractors, which will dilute existing shareholders significantly. Legal and professional fees have also shot up from about $158,000 in 2024 to almost $1 million in 2025. This is likely due to all the work involved in this filing and getting ready to go public. Now let's talk about the risks, and there are a lot of them. They're upfront about the fact that they have a limited operating history and expect to continue incurring substantial losses. One big concern is potential delays or complete inability to roll out their smart stores due to varying local permitting and zoning rules. This could seriously impact their ability to grow. Even their own auditors are flagging a major issue. They issued a going concern opinion, meaning there is substantial doubt they can continue as an ongoing business for the next 12 months. That is about as serious as it gets in the financial world. And how they're going public is also a risk. They're doing a direct listing, not a traditional IPO. This means no underwriter to help stabilize the stock price and potentially more volatility and uncertainty for investors. The opening price could be anything, and there is no guarantee it will reflect the true value of the company. Leadership is another area to watch. It seems like the CEO and his wife, who is also on the board, will have a huge amount of control. This means their decisions could potentially benefit them more than other shareholders, and that is always something to keep an eye on. Don't expect any dividends anytime soon. They're pretty clear. They plan to reinvest all earnings back into the business if they ever make any earnings. So your profit relies entirely on the stock price going up. And remember that share-based compensation we talked about, their executive agreements outline massive equity grants tied to milestones like opening stores. This could mean tens of millions of new shares hitting the market, substantially diluting existing shareholders and potentially driving down the stock price. Now before we wrap up, let's touch briefly on the auditors. Their first auditor, Rosenberg Rich Baker Berman Parr, resigned, or rather they are no longer the auditors moving forward for 2025. They were replaced by Bush and Associates CPA LLC. This sort of auditor shuffle can sometimes raise questions, although the report itself did not contain any adverse opinions. It did mention the going concern issue. So what is the overall picture here? VenHub has a very ambitious vision for autonomous retail stores, and the tech they're developing sounds cutting edge. However, the financials tell a much tougher story. They are burning through cash at an alarming rate with massive operating losses and a growing debt burden. The going concern opinion from their auditors is a serious warning sign, and their direct listing approach adds another layer of risk. While they have pre-orders and a lot of pending patents, the path to profitability looks incredibly challenging, and the dilution from executive compensation is a significant concern. This is definitely a high-risk, high-reward situation, and investors need to be very aware of the substantial hurdles ahead. Alright, that is our take on VenHub Global Incorporated's latest filing. What do you guys think about their ambitious plans and the financial realities they're facing? Let me know in the comments below. If this deep dive was helpful, please smash that like button and subscribe to Corporate Decoder for more breakdowns like this. And hey, if you want to join the conversation and get more exclusive insights, check out our Discord community linked in the description. Thanks for watching, and we'll see you on the next Decode.